Hi, and thank you for joining Fidelity Soundbites, a straight-to-the-point monthly podcast where we speak to some of Australia's leading portfolio managers on what's happening in markets, how they're positioning their portfolios, and the outlook going forward. I'm your host, Andrew Dowling, and in this episode, James Abela, Portfolio Manager for the Fidelity Future Leaders Fund, joins us. James joined Fidelity in 2004 and has been investing in mid and small caps for nearly 2 decades and established the Fidelity Future Leaders Fund in July of 2013. Welcome, James.
Thank you.
James, look, it's obviously been a pretty good start to the year, calendar year. That's as far as markets go. What's happening out there? What's your current observations on where we see ourselves?
It was certainly January was a very bullish month. The market was up around 10%, so double digits to date. It's the last day of January, so the market's feeling good this month. But it's certainly the market's ebbing between three sort of philosophy points. One is really one that's quite bullish and really thinking you've got peak inflation, peak rates, peak fear, and everything will kind of get better from here. So that's sort of the more bullish scenario is really that. And if you do look at market growth expectations and free cash flow yields, that actually you can kind of see it there. And the second sort of moderate view is more that consumers are going to slow a little bit. Consumer confidence is going to soften a little bit. But employment is still going to be quite strong, so it's still going to be kind of okay. I guess you call that the muddle through kind of approach, which is becoming a bit more consensus. And then you have the bearish sort of scenario, which is very strong towards the end of the year. There was a lot of concern about recession, the impact of higher rates, higher rents, corporate starting to slow, investment starting to slow, and consumers are really starting to lose confidence as those interest rates and inflation impacts really start to come through more aggressively. And I'd definitely say the market's in the mindset of that kind of moderate view, which is where I am, kind of moderate to bullish, or more positive. And certainly globally as well, the market was very concerned about European recession late last year, and that sort of started to slow a little bit. But now the market's much more focused on US recession probabilities and also the debt ceiling that's going to happen in the US. So that's kind of the global settings are also changing, which obviously affects Australia as well. That's sort of where the market outlook is at the moment.
So what has to take you from being moderately bullish to bullish? What has to either happen or not happen or both?
It comes down to earnings. Earnings growth is really what matters, and that's going to happen in February. We'll know what the outlook is for businesses, and the companies that are going to deliver growth will be doing well, and the ones that don't deliver growth or disappoint on margins or disappoint on outlook will be very severely impacted. Today we had Megaport report that had higher capex and costs. Stock was off 20% today. So you've had retailers come out as well that have had difficult results that were also down to the double-digit levels. So it's very, very mixed. And if you disappoint, I think in this market, it's going to be very tough. And I think overall for the market to lift, you're going to need earnings to be looking quite positive across the board, which is what the expectation is currently. But until they are delivered in February, I think the market's still going to be unsure of which way to go.
Yeah. And when we apply your QMTV, quality, momentum, transition, value lens across the portfolio, how are you positioned as we lead into the reporting season? What's the general feel as we walk through the next 4 weeks of reporting?
Certainly, quality, I am still, 40% in quality. It's still a very strong position in quality, and certainly overweight the market, overweight the benchmark on quality. That's going to be the long term, and it always will be. But valuation discipline, I believe, will sit through the whole year this year. And with that valuation discipline sitting, quality is not going to be a very dominant. So 50% is my limit. I don't have it at 50%, I have it at 40%. Whereas momentum, on the other hand, is really low. Like, it is the absolute lowest I can have, because I think loss-making businesses, momentum, thematics, concept stocks, anything along that momentum type of category is unlikely to work this year because of inflation, because of the valuation discipline. And then value transition, we kind of have it model weight, because I do think you need to be in free cash flow businesses which have a reasonable outlook. But you don't want to be in businesses that have been given the benefit of the value rally, that don't have earnings growth, and you've seen them disappoint lately and they've come off 10 to 20%. So you need to be in businesses, again, where there is earnings, which is more quality, where there is certainty, where there is pricing power. And that's why you still want to be slightly quality skewed, but you need to be evaluation discipline in this market. And I do think that'll hold all year.
Right, thank you. And in terms of the overall outlook, as we look through the year ahead, the local market, I know a number of the companies that you own across the portfolio, particularly in the top 10, have a strong exporting aspect to their business model, what they do. What's your general sentiment on the local market and how we work through to export markets for some of those key holdings?
Yeah, definitely. I don't have a lot of domestic consumer focus. I do think that's still a risk for the Australian market. But I do have mostly, externally pointing businesses. So external consumer, global consumer businesses, global industrial businesses, global tech businesses, and also global healthcare businesses. So definitely the portfolio is tilted towards global consumer. And one of the brokers put out some reports today saying that expectation for 20-30% growth in that market of international growth stocks right across the Australian market, it's quite strong, whereas domestic growth is more just double digit. So there is a difference between domestic stocks and international stocks at the moment. It's quite a marked difference, which is quite material. And the portfolio is definitely skewed towards those. And that's really through the sectors of financials, technology and resources are really where we're getting those exposures to the international markets.
Yeah, so very much that business-led sector as opposed to the outlook on a domestic consumption basis in the Australian
market. I do have
a
decent exposure to consumer, but again, they're all global. They're all global businesses, whether it's in autos, but it's not autos. It's in through PWR, which is PWH, which is a cooling system, which is in Formula One, and it's in high spec, specific, big corporate sponsored events, or specialist cars, which are very different to general consumption. So I'd say, definitely the exposures are more towards global rather than domestic or traditional consumption. And the other end of the spectrum, we've got things like QSR, so things like Collins Foods should still do well. It had a bit of a disappointment in the last few months, but it will still grow during the next few years as people go towards lower cost food and lower cost dinners and lunches for themselves or their families. And I think those sort of environments, the consumer is kind of all right. But overall, especially things like apparel, it's still going to be pretty tough.
Yeah. And in terms of company story, stock story, is there a standout or is there a particular export-led company that you've held for some time that continues to deliver for the portfolio?
Yeah, Altium's definitely the one. So it's been held for nearly 10 years. So it's one of the very few software companies in the world that provides a software platform for engineers to build PCBs, which is printed circuit boards. So if you think about inside a phone, a washing machine, an aeroplane, a car, a fridge, all of those things need printed circuit boards in order for them to do what they do as machines. And that needs to be designed on a very specific software. And you've got multiple engineers all around the world trying to build PCB boards with many, many collaboration points. And that's what Altium does and has done. And it's an amazing story. The CEO, Aram, has been there for many, many years. And there's, a huge story write-up of him, coming in as a refugee to Australia, and he, built the business, spoke to Google and Microsoft in the early days, and then the rest is history. It was, a few $100 million, and today it's a $5-6 billion company. So these are the things that you try and spend your life trying to find in the Aussie small cap market, these beautiful compounders that do something very unique for the world. They're in market structures that have less than 3 or 4 people in the world doing what it does. So it's not a highly competitive market structure. They've got lots of, pricing power and differentiation in what they do. It's led by a strong manager who's almost a founder as well. So an engineer. So that story's been great, and it actually tried to get taken over by Autodesk late last year, just because it is a very unique asset. But that did not go through. That's still a significant holding in the fund, and that's what I'm still quite confident about the outlook for that business overall.
Well, that brings us to the end of our program today. Thank you, James. Appreciate you joining us.
Great. Thank you very much.
And thank you for listening as well. If you've enjoyed the episode, please subscribe to the podcast via your favourite streaming platform, and we'll see you in the next month. Bye for now.
Some important information on today's podcast. This podcast is issued by Phil Responsible Entity Australia Limited, AFSL number 409340. This podcast is intended as general information only and has been prepared without taking into account any person's objectives, financial situation, or needs. You should consider the product disclosure statement and target market determinations for Fidelity Australian products at fidelity.com.au. Please click the link in the show's description to read the full disclaimer.